Hi everybody, Bob Iacchino from Path Trading Partners and the Pure Exposure Growth Series, and I guess now I should say also from the Stock Think Tank. We just launched this product. We kind of rushed it to market. We've been talking about it and working on it since September of last year because we were expecting a big correction, if not a bear market. Now, we weren't expecting a virus. And for those of you that watched the Pure Exposure Growth Series, you know that on February 18th, we basically said this was a black swan. The coronavirus was a black swan. Several guests on there said it as well. And then in our last show in March, we gave some of the ideas that we liked to take advantage of this black swan. Amelia Bordeaux's trade kind of stands out to me about shorting the Aussie dollar, which worked out really well. But now what I want to talk about, and you can check out the Stock Think Tank at thestockthinktank.com. We had some long positions that we put on March 18th, and we got out of some of those. We recommended getting out of those long positions, so we covered longs. It is Thursday night at about 10 to 6 p.m. Central Time, and as of now, we've only got about 4 of those stocks left, starting with the initial 8 plus a couple of special picks. So why did we cover longs? Well, the Dow is up 3 days in a row. All the indices are up 3 days in a row now. The S&P just broke a streak that it tied by having the most consecutive days without 2 up days in a row. It closed that streak out yesterday. It tied the longest streak, 28 days, since World War II of not having 2 consecutive days up. That was broken yesterday, and we're up again today, and we're up substantially today. But bear markets don't end this way. They don't end with a stimulus package passed by 1 House of Congress, not 2, and not yet signed by the president, and not yet enacted or enabled into the public. That's not how bear markets end. We still have the economy shut down, and we still have the virus in the U.S. on an upward trajectory, and it looks like we're going to become the global epicenter of COVID-19 now. So this is not over, not from the fundamental side. Those are the fundamental reasons for it. But from a technical side, bear markets don't end this way. The shortest bear market from bear market low back to the bear market entry price in the last 3 was 1987, and even that was 4 months and 17 days. So we're doing long stocks in the Stock Think Tank, and what we're doing is covering those when we get to our targets, whereas normally we follow them up and we trail our stops. Some of the stocks we have some trailing stops on right now. So let me show you on an S&P chart why I don't think this is over. Here's an S&P chart on our Power E-Trade platform. So what you're seeing here to the right is the last 3 days of up moves, okay? This is likely to be the strongest week for the Dow Jones Industrial Average, unless we have a massive sell-off in toward the end of the day Friday, which is possible, but it'll be the strongest one since 1931. Are those 3 days right here. This is the S&P, not the Dow, but that's okay. Now, if you've watched any of our videos before, what Mike and I always talk about is the rotation zone, and it's represented by these 2 moving averages. Now, what we look for is for those 2 moving averages to be moving in one direction, in this case down, and widening apart. Okay, so here there's this much room, and then it just gets wider as you get down to the bottom. That forms a really nice rotation zone, which we have here. Okay, it's very nice there. So what do we do with the rotation zone? Well, let's take a look at it. If you look up here toward the top, okay, this is what we call a first cross right there. Then the rotation zone either forms or it doesn't. We don't trade across. And once it forms, we look for price action to go back up into the rotation zone to give us a potential entry. Now, there's more that comes into that. Okay, what is the risk? Where's the stop going to go? Position sizing, targets, whether the target works versus the stop, etc. But one of the points of our entry is price moving up into a rotation zone, like you see right here. And then we draw a trend line along that path. And when it breaks this trend line, we then know that we can take a short. Okay, again, we have to look at all the other criteria. So what do we have happening right now? Well, you have price going back up into the rotation zone. Now, you could say that the rotation zone has changed from this shape to this shape. And you would be right, because that's what's happening. It's starting to actually turn up a little bit. But that doesn't mean that it's not going to turn back down, nor is it a signal that the market is about to do this. Okay, even if it did, if you look right here, you've got the 50-day and the 200-day looking like they're about to cross. And what is that? That's a death cross. Now, a death cross isn't terribly reliable, to be honest. As a matter of fact, what tends to happen after a death cross is the market moves up toward the death cross before it sells up again. Okay, but that's not something that we trade. So this would be substantial resistance anyway. But what's likely to happen is wherever this rally ends, we're going to get a pushback down. Maybe just to the lows or maybe to new lows. Okay, we don't know. But that's why right now we're taking profits on long positions. It's because the formation of this is more likely than the continuation of this, just based off of what normally happens in bear markets. I've talked in other presentations about the 1987 bear market, which is the fastest of the most recent bear markets to get to its low. It happened in one day. The market entered a bear market on October 19th, 1987, and it exited it on October 20th. I'm sorry, it made its low on October 20th, the next day. But even at that point, for the market to get from its low, okay, which wherever that's going to be, back up to the bear market price was 4 months and 17 days. And that's the fastest of the last three recessions. I'm sorry, bear markets. The last three bear markets, 1987 was the fastest one. Now, to me, this feels more like 87 than it does like 2002 or 2008. But still, 4 months, 17 days was the fastest it went. Is this one going to be 4 months? I don't know. But it's not very high probability that this is happening right now. All right, so as I said, this doesn't necessarily mean that there's new lows coming, but it also, to me and to us, doesn't mean that this was the rally that's going to end this whole bear market. We're going to be stacked back up toward the highs. It just isn't going to work that way. We just got the 3.3 million jobless claims number. It was expected. We're probably going to get the worst non-farm payrolls number of that we've ever seen coming up. So the data is going to be bad, and what's going to end up happening is there's going to be some data that's not as bad as it looks. Then there's going to be other data that's way worse. So now it's about getting this virus under control, same thing I said in the last video, and getting people back to work. That's different from what I said in the last video, I believe. I don't know if we were locked down in that last video. But going forward, that's what we're going to be looking at, is the process of that. And in the stock think tank, we're going to be looking at stocks that can take advantage of that. But then we're going to be covering them when it's appropriate to cover them, because there's going to be a bunch of rallies and then sell-offs, and then rallies and then sell-offs. And there's going to be that one rally that breaks out, and that's going to be the one that you want to follow up. April 13th is our next Pure Exposure Growth Series live stream. We have some confirmed guests, okay, but I'm not sure who's going to actually end up making it by that time, because what if we're still on lockdown? So Steve Kalajian from Ticker Talker was going to be flying in from New York to be in studio with me. Don't know if he can. Jim Iurio from TJM Institutional Services was going to be in studio with me. I don't know if he still is. Kumal Shri Kumar, who's one of my favorite strategists, so to speak. He's just one of the smartest guys out there by a lot. He had committed to be on via Skype. I assume that'll still be the case. So I think what we'll do is we'll announce guests as they confirm going forward, and you guys will get that information. Thanks for watching, and I'll talk to you guys very soon.